What's going on, guys? Today's article is brought to you by Routers. The US 10-year yield at highest since October drags on shares. Treasury yields lifting the dollar higher, weighing on gold and oil. Yen at its 9-month low as traders eye intervention from the central bank. The MSCI World Index at 5-week low. The uh, stocks down 0.35%. Payment firm Aiden shares fell 20%. The, the US 10-year Treasury yield on Thursday reached its highest in 10 months, underpinned by fears that US interest rates might stay higher for longer, contributing along with China's woes to world stocks languishing at 5-week lows. So basically, they're saying that US bonds are rising. They're offering more interest than interest that investors can get from stocks. So they rather go to bonds because of the safety of bonds. And China is also having a slowdown in economic growth because of their real estate market. Basically, their real estate market is crashing. So the whole world is coming down to crash, guys. And when the whole world is crashing, it's better to hold dollars than any other currency. Anyway, let me continue. The benchmark 10-year yields reached 4.312% on Thursday, testing October's 4.338, a break past which would be its highest in 16 years. The reason behind the rise is the strong data of the U.S. domestic demand. The minutes from the Fed's July meeting released Wednesday feel really dated. They're talking about a gradual slowdown in the U.S. economy, but when you look at the date, we are not even in a slowdown, said Sammy, chief economist at Lombard Odier. Those minutes showed policymakers were divided over the need for more interest rate hikes, with some citing the risk to the economy of pushing hikes too far. U.S. retail sales data came out strong earlier this week, and traders are also watching the Atlanta Federal Reserve GDP now forecast model, which showed the U.S. economy is likely to be growing at 5.8% annualized rate in the third quarter. That's a good GDP number, guys, which only reinforces that we're going to have interest rates higher for longer. Expectations for U.S. peak rates have not changed significantly. However, instead of the changes in yields have been driven by changes in medium-term rate expectations. What's interesting is usually when you have volatility around rates, that's the market trying to price in a higher Fed funds rate. What's happening here is the market is pricing out cuts or at least delaying them till later, said Char. The impact of higher yields is standard. A dollar that is well supported and equities under pressure, he added. MSCI's World Index was down 0.18% on Wednesday, at its lowest level since July 16. Europe's broad stock 600. Euro's broad stock 600. Where was I? Yep, Europe's broad 600 fell 0.3%, with the Dutch benchmark standing out, down 1.12% after a 22% fall in payments firm Aiden, whose first half earnings missed estimates. The world share sell-off could pause in the US, however, with Nasdaq and S&P 500 share futures up around 0.2%. China woes. China's economy was the other topic on investors' minds as a series of economic data and ructions in the property sector have laid bare the stuttering post-pandemic recovery. China, guys, made some bad investments in the real estate sector. The latest development was embattled asset manager Zhongxin Enterprise Group, saying it will conduct a debt restructuring, a further sign of turmoil in China's 3 trillion shadow banking sector. MSCI's broadest index of Asia-Pacific shares outside Japan slid its lowest since late November in early trading Thursday. The index down is about 8% for August and set for its worst monthly performance since September 2022. Hong Kong and onshore Chinese share benchmarks steadied somewhat, albeit at multi-month lows, as investors pin their hope on possible government stimulus to boost the sputtering economy. I still think that there will be more action coming from policymakers. Harold Van Linder, chief Asia equity strategist at HSBC, told the Reuters Global Markets Forum it takes a bit of time. Van der Linde said the appetite to invest in China is very low, and that appetite has to do with confidence, and that won't change too quickly. It would be good if we would get some stimulus for consumers. In currency markets, the dollar index, which measures the US currency against six rivals, scaled a 2-month peak at 103.59, underpinned by higher US yields. The Japanese yen touched a 9-month low of 146.57 per dollar earlier in the session, with traders keeping a vigil on possible intervention chatter from Japanese officials. Finance Minister Shunji Suzuki said on Tuesday authorities were not targeting absolute currency levels for intervention in commodities. Oil prices steadied after 3 sessions of declines. US crude rose 0.21% to 79.55% per per barrel, and Brent crude was at 83.82, up 0.44% on the day. The spike in rates has weighed on non-yielding gold, which touched a 5-month low on Thursday. The shiny metal was last trading at 1,890 an ounce, having dropped as low as 1,888.30. So guys, basically what you can take from this is that oil correlates with stocks. So when you see oil going down, so will your Nasdaqs and whatnot, and gold as well. So gold, oil, Nasdaq, they're all going down while the US dollar is going up. So that is a negative correlation there. Anyway, guys, I think the US market is gonna go down. Do not, I repeat, do not buy US US stocks. If you're seeing a buy in Nasdaq, you better stay off the market, because it's harder to find a retracement, a reversal, than it is to follow the trend. So one of the easiest strategies I tell people is follow the trend. You don't want to go against the trend, my friend. There is a saying in the markets that the trend is your friend. So the trend right now, the sentiment is negative towards Nasdaq. So the trend is to the downside. Our next target area is 14K. So of course it's not going to go straight to 14K. Have minor fluctuations, but every time the market retraces, we can expect to sell it at the 50% Fibonacci level. There you have it, guys. Today's fundamental analysis on the US markets. Don't forget to like and subscribe. Share this information with your buddies so that everybody gets to make money off this environment, high interest rate environment.